Stock market analysis and projections for the S&P 500. First, take a look at this important information. Make sure you read this slide. It tells you about how we approach our analysis and what that means for you as you begin to apply it. If you've scrolled forward, please note that in this show, in my opening comments, there's great stuff for you to hear about my thoughts on the markets. And earlier in the show, Katie brings trade planning with options, where she gives you a trade setup in AMD in options and shows you our analysis. I bring you a hot minute on NVIDIA. You don't want to miss that. And Arby brings you a trade idea in WIN. So in case you scrolled forward or you're only watching a clip of this show, go back and watch those important parts to this show. All right, stock market analysis. I'm going to use the mid cap as a guide for our overall negative picture for the stock market. Now, we have been negative, you know that. We have looked for the stock market to enter into a period of risk that we believed would begin sometime around mid-August. Well, here we are now in mid-August, and the little rally that we were looking for, the one more time to the upside, didn't materialize. And I'll show you why. It's about the huge negative momentum that we see in the market right now and how that suppresses the shorter term rallies that we were looking for. That can happen when you get into periods where momentum changes swiftly. And that's happening right now. We call those swamping conditions, and you'll get an idea what that means. The first, I want to take a step by step here. We're going to look at the mid caps because we're looking for a guide to help us now, because these suppressed cycles are harder to read. So we need to look at other indexes and ways that we can get information. Then we'll transpose that over to the Russell, because the mid caps, the MDY and the Russell, trade similarly. It's important to look at those. And then we'll look at the S&P 500, the SPX, the daily and the weekly chart. And then I'm going to show you the momentum conditions in our MCM. So this is a pretty involved piece right now, and I think you're going to find it very interesting. This is the MDY. This is the mid cap, and we're looking at weekly analysis in here. And this is phenomenal. Excuse me. You can see, looking at this, that there is a rhythm in this market that is very identifiable. And that is what cycle analysis is looking for the rhythms of money flows. And you can see that right in here, how clear that is. On the bottom, of course, are our cycle brackets. And these are the harmonic families, and there is a dominant cycle and a minor cycle that is showing up in here. Sometimes there's 3 minor cycles or even 4 in the harmonic family, and sometimes we have 2 brackets on here or 3 brackets on here, and sometimes even 4, depending on really what's showing up. In this case, it's very clear when you look at these cycles that there is a dominant cycle and a minor cycle. You could see the minor cycles are smaller, as you see right in here. And then the minor cycle right here. What this looks like to us is that the mid caps are going to decline out over here in towards October, and I'll show you that on the daily chart, and that is giving us a negative indication. Also, what's important for you to see is that each time the reversal scout turns down here later in the cycle, in the second minor cycle, it sets up a decline through the end of the cycle. You can see that right over there, and you can see that right over here, and here it turned down right there, just in the last week or two. That says that through the end of this cycle, and the end of this cycle is way out over here, which takes you into 2024, there is trouble. Now, it might be that this minor cycle turns down and then you get another upturn, as you see right over here. And sometimes the upturn makes a higher high, and sometimes it does not, as you can see here, in a more negative cycle. It depends on how far this falls, but right now the projection is to fall down to about another 14 points. That would be about another 4% right over here, or down here to 445, which would be 26 points, which would be another 6, 7, 8% down over here in the MDY into this October time period. So this is a negative condition for the mid caps. That says that there are probably somewhere between 7 and 9 weeks or so still to fall. Now, when I switch over to the daily chart, look at this phenomenal cyclicality that's in here. I mean, if you want to really understand the timing in the stock market, You can see that right over here. And when I look at the cycle patterns, that is right here, you can see both the minor cycle right there and the dominant cycle should trough in between these two lines that we have here. And that's where it's getting right now, and a trough is due. However, based on what I showed you on the weekly pattern, it suggests that this next cycle will be to the downside again. Yes, there's rising phases in here. This is likely to give you a bounce, and there's some bounce potential in the stock market, and then moving to the downside again. And the next trough ends in October, as we see noted right over here, and I can highlight that for you here, and it tells you that the next trough is, well, at the very end of October, November 1st. So that really gives you an indication, as we showed here, that that low is probably coming towards the end of October right there. We have it pointing to the 10/30, October 30th right there. And those potential large declines is illustrated there also, and I'll show you the side-by-side here so you can see the weekly and the daily, for those of you that are students of psychoanalysis. So now I'm going to switch over to the Russell, because the MDY is really important when we look at that on the Russell, because it overlays so closely. Remember, the Russell is small caps and the MDY is mid caps. And what this shows us is that the trough that we're looking for in the mid cap, so the mid cap is green right over here, comes at this time frame that the Russell is likely to give you a bounce also. But look at this cycle right over here, how negative that is there. And let me just zoom in so you could get a closer look here. And look at the momentum conditions. The slim ribbon, which kept you bullish throughout this whole period. You can see it here on the slim ribbon PO. And each of these upside resumptions warned you that momentum was going to head back to the upside. And then it turned neutral, and now it's turned negative. That says to us that this bounce that looks like it's coming right now, and the Russell is up here on Friday, is likely to continue for some brief period of time, some number of days, potentially getting to 1908 over here, but this is a sell zone, and this is declining. It might actually be a little lower already because this is lower, because this is falling. So momentum negative, the cycle configuration is negative. Both of these, or all three of these, the minor, and the dominant in the MIDI, MDY, and the Russell, making its low timing right in here and a potential bounce. And that says to you that look for a bounce and then look out, because this is likely to be falling again sharply. This takes you down here until September. The next one over here takes you down into October. And we're really looking for some fairly negative situation here in the stock market with some minor bounces based on what we're learning now from the MDY and from the Russell. So now I'm going to switch over to the S&P 500, SPX. Now remember that we were looking for a bounce, and that bounce did not materialize because of the severe downside pressure. Here's the daily chart, and I'm going to come back to that in a second, but I want to be on the weekly chart right now. And there's that period of risk that we talked about for so long in that yellow zone, and the market moving down sharply. The warning came right over here as the reversal scout turned down, and generally when the reversal scout turns down, you continue down through when this cycle trough comes. The daily chart points to mid-October before the cycle troughs come. And in the beginning of the show, and if you didn't watch it, you should go back, there's so much in there, I talked about the fact that we were downgrading this, and that we could see a decline of as much as 13%. That would be somewhere down here under 4,000, 39.75, which is this 78.6% level right over here. Our original thoughts was that it would get down somewhere between 6 and 8% right down in here, right now down to, I think, 5.7%. And the market still, under the best case, probably stops here at 4,200. But there's a potential here at 4,100, and then this decline over here at 39.75. One other thing that I did say in the beginning of the show is that we never want to be an alarmist nor a doomsayer. That's not our style. We just simply do whatever the charts tell us. And when we get a sharp magnitude and a big decline with a lot of time to go, it warns us that the lower supports could get hit. So we're not looking for, a huge decline right now. And remember, if it's only this like 10 to 13% right in here, that's a very normal correction in a bull market. So it's very likely the case. But when you get into this kind of alignment, big downside magnitude and negative momentum, anything can happen on the downside. So the window is open for declines down into these levels that we're pointing to. And if it wants to get worse because there's some panic in the market, the time between now and the end of October would be the likely time that would happen. It's not our analysis. The worst case we see now is 10 to 13% on the downside, which is a downgrade that we put in here from our original thoughts that this period would be more like 6 or 8% to the downside. Still a very significant period of risk. Let's go back to that daily chart here. And what we were looking for, and what a lot of people were looking for also, was the rebound in this period right over here. And that would normally be what would happen, but I showed you that steep magnitude of decline, and what that does is it swamps the rally in here. We could not get that uptick that we were looking for, and we thought it was a high probability that we would test the high or get close to it, but then things changed. And you can see that what we have is this condition where this cycle came, the momentum turned to negative here. We got that resumption signal 4 days ago to the downside, and then it just absolutely collapsed in here. A lot of selling. Now, it's trying to get back to even here as I'm doing this recording here at midday, but there may not be a lot in here. Where are the resistances? Well, it's down here at 44.25, but the slim ribbon often gives resistance as it gave support over here. So the rebound could come only maybe to about 4400 to 4410 and then begin to turn down again. So the expectation would be at the end of this cycle, this minor cycle here, it would move down to this level at 4306. But now I have to say that this area over here at 4208 is a pretty good probability. We'll just give that a nice red line for you to see, which is more likely of a probability. So we're looking for a decline over here, and this yellow zone over here is where this would accelerate on the downside. Now, let's take a look at that Russell that we were looking at. So here's where that little Russell low was looking for, right there, as we showed you on the Russell chart. And so the Russell is the green dash bracket, as we show you here, and that is likely to give you a lift right into this area. That if that came to that 44 to 4410 with an outside here at 4440, then I believe that you get into this zone over here where the minor cycle and the Russell cycle are coming down and have another large selling wave that would come here out into mid-September. Then you have to deal with the next period out over there, which is going to be the real period of risk out into the beginning through middle, second, third week of October, where there could be some very hard selling out over there also. So that would be this cycle here giving you an upside bounce, and then this cycle, these cycles here, giving you this next minor period of risk, which would be significant on the downside, and then another bounce, and then another very significant period of risk out into that mid-October period. So what I showed you in here is first looking at the mid-cap and showing you how those cycles are beautiful and how those call for a little short-term bounce soon, and how that goes on, goes onto the Russell chart. And you can look at those, and they trade fairly close together because they're mid and small caps, and that makes sense. And then put that over onto the S&P 500, which is under huge pressure from the intermediate patterns, preventing any real upside movement. Very likely going to see some attempt to the upside in a minor way. 4400 to 4410 is a reasonable, very short-term target. and then moving again to the downside. Now I want to switch over to the market conditions monitor because this is so important to look at. I want you to see the short-term patterns in here. We're on the time frames mode right over there. You can look at it in time frames mode or trader mode, depending on if you want to look at the particular style of trader that you are. And here what you can see is that back on the reversal scout back on August 3rd gave you a negative signal. This slim ribbon confirmed on that again on August 15th. Here you can see the QQQ August 3rd, August 11th. Here you can see the IWM August 4th and August 15th. So these are when they were giving you those negative signals on the daily or the short-term charts. Now, if you were more of a shorter-term even trader than that, you could have gone to the 2-hour right there, and you could see that they were bouncing around a lot, but they're certainly been in significant negative mode for quite a number of time in here. And if you look at the IWM, that's way back to August 2nd when it was giving you those signals. So we have warned about the momentum turning negative, and you can see how important that is. On the weeklies, you can see in here what we have is still that we have situations that are mixed. It hasn't really given strong signals yet, though we're just beginning to get them, that the intermediate is deteriorating. Let's switch over to the trader mode right over here, and you can see what we're looking at. We're looking at a short-term trader. You know, that's you're a swing trader, option trader. That's the kind of time frame that we're looking at in here, and you can see that this is under bearish conditions also. So this is just a fantastic app, and you can get this several different ways as a standalone or becoming a level 3 or 4 member. So that's really important to look at when you see this. You really can gain a lot of information looking at this great app. So if you want to see that what some of the other key stocks are and the conditions they're in, you can see them right in there. You see Apple bearish, Adobe bearish, AMAT bearish, just a lot of really negative things. And there's a few things that are still bullish in here. The dollar, of course, Amgen is holding up as bullish, and there's not a lot of bullish stuff here when you look at that. So basically, when we look at the trade setup condition, you can see there are quite a few that are very bearish, and you see the indexes and they are bearish. So great app, and our algorithm is built in here, and it's very helpful for you to use this. So I wanted you to see that. I think it's important when you look at that. That's just great stuff. And if you want to get that all the information I just showed, you can do that by taking our level 3 special. Just go to the top of the askSlim website, click that sign up now button. You don't sign up by hitting that. You get a ton of the information of what you'll be getting, and 35% off for a 3-month membership, 50% off if you just want to give us a try for a 1-month trial, and you'll get everything I just showed you in some variation for you to look at. Just a massive amount of information and analysis and education that we will share with you. So great deal. Make sure you take advantage.